Department of Revenue is reminding families about several important deductions and credits they may be able to claim on their individual income tax returns. So with a breakdown of what they are and how to know if you're eligible, we have certified public accountant Angie Brazel with us again. Angie, thank you so much for being here.
Yeah, no problem. And I'm happy to be here.
Yeah, all right. This is going to be a different topic now, still involving taxes. This one, we're going to start with that tax credit EIC. So what is that?
Yeah, so there is a federal and a state version of the Earned Income Credit. So this credit is for low and middle range income earners. You do have to work to earn it. So it's not just, you can't just have a bunch of investment income. So it's an earned income. If you have no dependents, or if you have 3 or over dependents on what income level you have to be at to qualify for the Earned Income Credit. And this is actually a refundable credit. So if you have had taxes withheld during the year, you may be eligible to get all of those taxes back plus some extra money, you know, to help with taking care of those dependents.
The child and dependent care credits.
Yep, so that is eligible for people who have dependents. Typically that would be children. You can qualify for other dependents. Maybe you're taking care of a elderly parent or a disabled child over the age of 13, and you're having to pay for their care. So that would be a credit that you can get. Again, it's going to be based on income. This, with the income, as your income gets higher, you'd be potentially phased out of it. I think it's $200,000 of income for individual, or $400,000 for a married filing joint. But you could potentially get up to $1,200 of a dependent care credit, basically get money back that you paid for care.
So is that the child tax credit, or is that
That's different. So that's for actual, so you would have to, for that one, both parents have to be working if it's a married filing joint, and you're paying for a daycare, that kind of thing.
Got it.
So the child tax credit, you don't have to have any out-of-pocket costs associated with care. That's going to be an automatic credit. If you qualify, again, there's an income level and there is a certain age. So that's a $2,000 credit as long as you meet the income level for all children under the age of 17.
Okay.
Once they reach 17 and older, or if they're other dependents, again, if you're taking care of aging parents or disabled child, then that does drop to $500 per year.
And really quickly, lastly, let's talk about those education credits.
Yeah, so there are 2 different education credits now that families can take advantage of. So you have a kid going off to college, and the bigger one is the American Opportunity Tax Credit. And that you can get up to $2,500, and a portion of that is actually refundable, which means you don't have to have tax liability to get, I think it's 40% of that amount. So you do have to, of course, have eligible tuition payments. You have to get a 1098-T from the school to be able to put that on your tax return. There's an income level for that as well. So as you get into the higher income levels, taxpayers would be phased out from being able to take that American tax credit. The American Opportunity Credit is only available for 4 years. Once you pass that point, you could be eligible for the Lifetime Learning Credit. It's $2,000, no refundable portion. Again, subject to income levels.
All of that subject.
All of it.
All right. Well, Angie, thank you so much. We appreciate this. She's actually going to be joining us again in the next half hour to talk about those state-only South Carolina tax credits there. Stay with us.